Do you sometimes purchase the same merchandise item at a different purchase cost? Well, then you need to learn how QuickBooks Online manages changing purchase costs using the FIFO method. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. In order to know the gross profit and net income of our merchandise business, you must have an accurate calculation of the cost of goods sold. You must properly track your purchase cost of all items that were sold as well as items still on hand. There are 3 acceptable accounting methods to track your products' changing purchase cost. The accounting method that QuickBooks Online uses to track changing purchase cost is called first in, first out, also known by the acronym FIFO. First in, first out assumes the items of the same type are sometimes purchased at different costs. When selling the items, the accountant or the bookkeeper does not know which specific items were physically given to the customer in that sale. As you know, all apples look alike, even though we paid a different purchase cost for the different apples that are sitting in our inventory. Some of the apples you gave to the customer were purchased at one cost, and the rest of the apples that you gave the customer were purchased at a different cost. And you don't know which ones were purchased at which costs. All you did was grab the apples and give a bunch to the customer for the sale. Therefore, you cannot know for sure the purchase cost of the goods that were sold because you don't know which cost you purchased the apples that were sold. So what do you do? Well, FIFO assumes that the very first items, in this example apples, that were purchased were the first ones to be sold. So, if you know the cost of each purchase, then you can assign the cost to the ones that were sold. For example, let's imagine we start off with 4 apples in our inventory that we paid $10 each to buy. Now, if we sell 2 of them, we know the cost of goods sold is $20 because we know for sure we paid $10 each for the 2 apples that just went out. But now we buy 2 more and we pay $12 each for the 2 new ones that we just bought. So now after that, if we sell 2 of these, do we know the cost of goods sold? Well, it depends on which 2 did we sell. If we sold the 2 red ones, we know the cost of goods sold would be $20 each because we know we paid $10 for each of them. But if instead we sold 1 red and 1 green, that means we sold 1 for $10 and the other one we paid $12 for. So in the second example, if we sell 1 of each, the cost of goods sold would instead be $22 for that very same sale. FIFO assumes the first ones in were the first ones out, and the red ones came first. So which 2 did we sell according to FIFO? According to FIFO, we sold the 2 red ones, and in our first example, the cost of goods sold for that first sale would have been $20. But now let's imagine we buy 2 more and we pay $15 for each of the 2 new apples that we just bought. Now in the next sale, let's imagine we sell 3 of these apples. So there are 4 in front of us and we sell 3. Well, which 3 did we sell? The green came first, and FIFO says first in, first out. So we sold the two $12 ones, so far that sale is up to $24 in cost of goods sold. But we didn't sell just those 2, we sold 3. So we need to sell one blue one, and that means that adds an additional $15, what we paid for the blue one, and that gets added to the cost of goods sold for the sale. So for that sale of those 3, the cost of goods sold would be $39. Now we'll try examples with larger numbers. And if you need to pause the video to do some math calculation on a calculator or Excel, just to verify what we're doing, that's fine. Or you might want to watch the whole video, and then the second time around that you watch it, pause and verify the numbers that we're calculating are correct. So let's imagine we're starting in inventory with 150 apples that we paid $10 each. Now let's imagine we buy 200 more apples and we paid $13 for each of them. Well, that's fine. We now have 150 at 10 and 200 at 13, and you could multiply and figure out what the cost of inventory asset is. However, let's imagine now that we sell 175 apples. Remember, the first ones in are the first ones out. So if red was first and we sold 150 apples, that means red was first and we sold 175 apples. That means that all 150 apples at $10 each are sold. And we didn't have enough from the $10 apples. We actually have to have 25 of the $13 apples to make the 175 for the sale. So we're going to also take away 25 from the $13 apples, so that after this sale, we're left with only 175 apples that we paid $13 for each of them. And multiplying 175 times 13 would be the inventory asset cost of apples after that sale. So we now have 175 apples at $13 each remaining in our inventory. But what was the cost of goods sold for that sale? Well, we sold all 150 apples that were purchased at $10 each, so that contributed $1,500 to the cost of goods sold. And then we needed to add another $25 to make the total 175 apples for the sale, and we paid $13 for each of those, so that contributed $325 to the cost of goods sold. So the cost of goods sold for that particular sale was $1,825. QuickBooks Online is keeping track of these numbers behind the scenes. There is no report that shows the breakdown of the purchase cost of each item on hand. The inventory valuation detail can help you figure this out, but you have to look carefully at it. It's not always clear. So if we go now to QuickBooks Online and we go Reports, Inventory Valuation Detail, let's scroll down to bananas. And let's use bananas for our real life example. I'm going to stretch this a bit here. You can see that right now on hand we have 280 bananas, and we paid we paid $20 for each of these 280 bananas, and that's why the cost, specifically the asset cost of just bananas, is $5,600 right now. So the inventory report before we buy bananas at a different cost is showing right now we have 280 bananas at $20 each. Now, let's imagine on January 25th, we purchase 300 bananas from Sam and we pay $22 each. Well, if we do that, what will be in inventory? We'll still have 280 bananas at $20 each, and then we'll have another 300 bananas at $22 each. So let's go ahead and record that. In the top left, click New, Expense. This is January 25th of 2020. We bought from Sam's Farm. Oh, don't forget that we're paying from cash. Don't forget we're paying from cash. And by the way, let's close this because this is not related to any prior transaction. So we're paying from cash and bank to Sam's Farm on January 25th. Product and service is bananas, and the quantity is 300, and this is the first time we're going to change the rate. The rate is $22 instead of $20. Now look what happens when we click Save and Close. At the bottom of the inventory valuation detail, it's not exactly clear. You have to look closely. We had, on the 22nd, we had 280 bananas that we paid $20 each. Now we bought an additional 300 bananas that we paid $22 each. Now the quantity on hand is now 580 bananas, where 300 of them we paid $22, and 280 of them we paid $20. So it's not laid out as clearly as it is in my little PowerPoint. But basically we have 280 bananas that we paid $20 each, and we have another 300 bananas that we paid $22 each. Now here's where it gets interesting. On January 26th, we sold for cash 400 bananas to Candy. Now if we sold 400 bananas, which ones did we sell? Remember, red was first, so that means we sold more than the 280. That means we sold all of the 280 at 20 each. That went out as part of this sale. But you see, we didn't sell 280, we sold 400. That means we need to take another 120 bananas from the bunch that we bought for $22 each. And if we bought 300 at $22 each, and we needed to take another 120 bananas out of that bunch to complete the 400 quantity sale, that means that what's left in inventory after this sale will be 180 bananas at $22 each. That's what will be left in inventory after the sale, because we had 300 of those $22 bananas, but we had to give up 120 of them as part of the sale with the other 280. So let's take a look. And right, what's left will be 180 at 22. Let's take a look at what happens when we make that sale. So that was, click New and go to Sale Receipt. Okay, the date was January 26th, and the customer was Candy, and the item that we sold her was bananas, and the quantity that we sold to her was 400. Now again, don't worry about the sales price. We're focusing on the purchase cost. But what we should have left in inventory is 180 bananas at $22 each. So let's go ahead and save this. Now scroll down to the very bottom. Scroll down to the very bottom. You can see that what's left in inventory is 180 bananas. That's the ending quantity on hand after the last transaction. 180 bananas, and they're $22 each. And if you multiply the 22 times the 180, that explains the asset value, $3,960. But before we look at anything else, let's ask this question. What was the cost of goods sold for that sale? Well, all of the 280 bananas that were $20 each were given as part of that sale. So $5,600 was that part of cost of goods sold. And we needed to take 120 of the $22 bananas to make a total of 400 for the sale. So 120 bananas that we paid 22 each adds another 2,640 to the cost of goods sold. So the cost of goods sold for that sales receipt was $8,240. You can pause the video to check the math, but let's do this. If I double click this sale receipt and then I click on more and go to transaction journal, you can see that the sales price, you see they break it up all crazy. They break up the cost of goods sold into pieces, so it's really hard to kind of determine what it is. Okay, what you could do is click reports, trial balance. When they make it harder for you to understand. Cost of goods sold, if I double click this and I scroll down, you see what it does? When you have a sale that has more than one purchase cost for cost of goods sold, QuickBooks breaks it up crazy. It breaks it up, you see, 1014, 1, 2, 3, 4, 5, 6. It scattered it to 6 different lines, but I'm going to show you something. These 6 lines together, where is it? Can I do this? These 6 lines together for this one sale receipt add up the money amount. I guarantee that it equals $8,240. So it would be nice if it would just show you $8,240, but it doesn't. It breaks it up crazy, but that's the way QuickBooks shows it. So FIFO would be challenging enough to understand if it put everything in one line. And none of the tech people actually gave a logical reason why that it spreads it out like that. So if you click Reports, Inventory Valuation Detail, go to the bottom where we have bananas, you can see what was given. You can see on the 26th, you can see that as part of this sale receipt, 120 bananas were given at the rate of $22. And that's what we actually said. We said part of this 400 banana sale, 120 of those 400 bananas were $22 each. And that is showing on the bottom line. 120 of the quantity that went out for this sale is for $22 each. And we also know that the other 280 bananas that are part of the 400 quantity sale were at $20 each. So, but what they did was they scattered that across several lines. So if you look at this, these are adding up, these will all add up to 120, guaranteed. So these are these will add up to the 280. So these 1, 2, 3, 4, 5 lines are the 280 bananas that we gave to the customer for $20 each. And in that same sale 1014, we also gave them 120 bananas that we paid $22 each. So FIFO would be a lot easier to understand if they didn't split it up like this. And to be honest with you, I really don't know, and neither do the tech support people know, why it splits it up like that in the report. But you will only have a transaction listed on several lines, one transaction for several lines. You will only have that in a transaction where there's more than one purchase cost for the item that you're buying and selling.